This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
So we're going to go through and use the example that we have in the notes, not to answer the actual requirements just yet. We're going to build up to that. What we're going to do is we're going to use the example to be able to translate the statement of profit or loss that we have here. So you can see the statement of profit or loss there. You can see that you have a parent that's Holly, that's in millions of dollars. You have a subsidiary that's in millions of dinars. So we will need to translate those results there from dinars into dollars, and it's in the statement of profit or loss. So everything there will be at the average rate. And I think here the average rate that we have is 4 dinars to the dollar. Okay. We'll also then go through and translate the statement of financial position. So everything within the statement of financial position of the subsidiary is translated at the closing rate. So the assets and the liabilities. But what we're going to go through and do as well is those retained earnings. We will also need to go through that and work out what the post-acquisition retained earnings are. Okay, so we will be going through that and translating the share capital at the historic rate. The retained earnings will need to be split, won't they? And they will need to be split into the pre and the post. The pre-acquisition will be translated at the historic rate, and then the post-acquisition figure will be a balancing figure, won't it? Okay. So what you can see there, this subsidiary was acquired on the 1st of January 2015. So January 2015, that 3.8 is the historic rate. The reporting date is December 2015, so that 4.3 is the closing rate. Okay. We're also told as well on the acquisition date, the retained earnings were 150 million dinars. So they are the pre-acquisition reserves, which actually make a little bit of sense, because if you go through that and look at the total retained earnings at the reporting date of 280, if we've made profits during the year, is it of 130? 280 less 130 gives me 150, which is there the pre-acquisition reserve. So it does all balance with regards to the accounting equation. Okay. So there's a lot of information to take on board there. I am not worried just yet about parts 1, 2, 3, and 4. Okay. Actually, we are going to work out part 2 because that's what we want to do within this session. But we'll put it all together afterwards. Okay, if that makes sense. So let's go back to the nitty gritty, the basics, the fundamentals. We'll leave the picky bits until the end. So we're translating Ivy. So we can ignore Holly for now. I'm not worried about Holly. There's no need to translate her. All of the revenues, all of the costs need to be translated at the average rate. So what you've got there is you have your figures in millions of dinars. That needs to be translated into millions of dollars. And the rate that we are going to go through and use is 4 dinars to the dollar, and we will use that for every balance that there is. Okay, so it's a little bit long-winded, but it makes sure we get everything right. Revenue 1644 divided by the 4. So to convert the dinars into the dollar, that base currency, you divide it by that 4, which gives you 416. Cost of sales is that 1288 divided by 4, gives me 322. Gross profit is 376. You can either translate it or just add it down. It's up to you. You've then got your expenses, which are 156, which translates it to 39 at a rate of 4. Profits before interest and tax are there at 220. Again, you can either translate it or add it down. Personally, I would just add it down, but it's up to you. You've then got your finance costs, which are 40, which at a rate of 4 gives you 10. So is PBT what was 180 in the functional currency of the sub translates into 45 in the presentation currency of the group. Tax is there as 50. It's the only one that's a little bit of a funny number when we translate. Effectively, it's just to make all the numbers work and make it easier. So that gives you profit for the year of 32.5, which was 130 previously before any translation. Okay. And then what happens now is everything gets consolidated on a line by line basis within the statement of profit or loss. Okay, so the revenue of the subsidiary, which is there, is it as 416, that will get added to the revenue of the parent. Okay, the cost of sales of 322 will get added to the cost of sales of the parent. Okay, and then you would make all the various adjustments, intra-company sales, pub adjustments, impairments, you name it. Okay. So at the moment, the profit or loss isn't much of a challenge. It does get more of a challenge when you bring in other comprehensive income and all the exchange gains and losses, but not for now. Okay. On the statement of financial position, what have we got there? Well, what we've got is we need to go through there and translate the assets and liabilities at the closing rate, which is fine. But it's then all about calculating these post-acquisition retained earnings, isn't it? So that's where we need to put in that new working that we've got, which effectively replaces the net assets of the subsidiary working. And we'll see why as we work it through. So it's our translation schedule, if you like. So again, what we've got there is we're going to go through and look at the figures in millions of dinars, translate it into millions of dollars, and then we're going to look at the rate that is used. So here you've got your non-current assets, which I think were 500. That will be at the closing rate of 4.3, which gives me 116.3. Okay. My current assets are there as 390. At the closing rate of 4.3 gives me 90.7, which if you total it up gives you 207. So I'm just working with the assets on the top and the equity and liabilities at the bottom because that's the way that the question is set out. You could do assets less liabilities at the top if you so wish. Rounding, don't worry. The examiner in the past has used 2 decimal places. I just use 1. What's the point in going to 2? It's not worth it, is it? Okay. And then you've got your share capital. So the share capital is at 350. Just be careful, that's at the historic rate of 3.8. So that gives me 92.1. I've then got my pre-acquisition reserves. So the date of acquisition, they were there at 150. I translate those at the historic rate of 3.8, which gives me 39.5. The post-acquisition reserves are the 130, aren't they? Because that's the profit that we've made in the year. We acquired the subsidiary at the start of the year, but it's also the difference, isn't it, between the 280 retained earnings at year end and the pre-acquisition reserves of 150. Remember, we're not going to calculate that using any exchange rates. We're just going to have that there as a balancing figure because within there's going to be all the gains and losses on translations of these net assets every single year. Okay, because this year we translate the net assets at the closing rate. They were translated at the historic rate at the start of the year. In the following year, they'll then be translated at a different closing rate. So there's going to be lots of gains and losses on those net assets. So it's going to get quite difficult to work out those gains and losses, so let's just lump them all in as one figure. Okay. What we've then got as well is your non-current liabilities, where there is 65. Again, that can be at a rate, of 4.3. So does that give me 15.1? So remember that the closing rate. Current liabilities are at 195. Translate that at the 4.3 closing rate gives me 45.3. The assets at the top are 207, which must then equal the equity and the liabilities. Okay, so we need to work backwards to be able to get the equity figure, don't we? Well, if we know the equity and liabilities are 207, if we deduct the liabilities of 45.3 and 15.1, again, check my arithmetic. I know you will. And let me know if I'm wrong. I know you'll let me know if I'm wrong. Gives me 146.6. And then to work out the post-acquisition reserves as your balancing figure. But if the total equity is 146.6, if the share capital is 92.1, the pre-acquisition reserves are 39.5, you should be able to work out there by deducting the 92.1 and the 39.5 from your total equity of 146.6, it gives you $15 million. Okay, that's your post-acquisition reserves. Okay. Why have we done that? What's the point? Okay, well, there's a threefold purpose to it, really. One is using these figures here, the 350 and the 150. That can go through there and give you your net assets at acquisition, which will go into your goodwill. Okay, so my net assets at acquisition are 500. The post-acquisition retained earnings gets used twice. The NCI get their share, and then the parent get their share within retained earnings. Okay, and then finally, you've got the current liabilities and non-current liabilities. So they will be consolidated on the group SFP as to, and let's not forget them, will be assets as well. They will also be consolidated. Okay, there you go. So that's a really useful working, although difficult, to substitute your net assets working that you've seen previously when you've ever done any other consolidation questions. Yeah, so it's only really relevant when you have an overseas subsidiary, because you can translate the assets, you can translate the liabilities and consolidate them, and then you can use them in your standard workings then for goodwill with your net assets at acquisition. And then you've got your post-acquisition reserves going to your non-controlling interest and the retained earnings, whereby within there are all those gains and losses on translation of the assets and liabilities every single year since the date we acquired the subsidiary. Okay, we're not too worried about calculating those just yet. We'll see those in a later video, but for now I want you to make sure that you can translate the statement of profit or loss, that you can work that new calculation there to work out the post-acquisition retained earnings. So I'd recommend that you go into the study text of your chosen tuition provider, work through the questions there, and when you've done that, then come back and have a look at the example alongside myself in the next video.